Welcome to this video, Music Business Management 101, Lesson 3, Easy Peasy P&L. The most boring part of any business is accounting. I agree, it's pretty much the most annoying thing you can possibly work with. So let's make it easy. I'm going to take you through what I call the Easy Peasy P&L. P&L standing for profit and loss, what you make and what you spend. So let's go over there and check it out. All right, so here I'm at the Easy Peasy P&L worksheet. And basically you do exactly what you do with any other worksheets. You just go ahead and make a copy and put it into your own Google Drive. This is the master sheet, so don't use this. And I'm just going to show you an example of things that you can put into your business that you might have expenses for. Now, what you would probably do is you would have this done by month. So like Easy Peasy P&L, this is January, then you'd copy it and make, February, March, April, May, and all the way through each year, right? So this is just one example. So it should be January, for example, if you're in January. But if you're looking at the example, you would say, okay, so we had online store sales of $75. So you could click that and you can see a drop-down menu here. It gives you other things that you can put in. If you have anything else that doesn't fit one of these categories, or you have recurring things that fit in another category, you can edit it and add your own, or you can actually, put it under miscellaneous. But for example, you got $75 in your store sales on January 24th, for example, there, right? Then you had a show that you played in Tulsa, Oklahoma. So you got $500, so payment for performing. Then you had t-shirts from that exact same date. You can see that it matches up here. You'd put the date, obviously, with everything. T-shirt sales, I'll have $120. Vinyl and CD sales from that show as well. So you had $200 in album sales. And then you see Spotify revenue here. So that's $45. And that's for the whole month of January, or maybe it's for every 2 weeks or whatever. But whenever they pay you out, you go ahead and put that amount in, and then you put the date in whenever it comes to you. Maybe you got some VIP meet and greets from the Tulsa show as well. So there's $180 there. And that was from the 28th as well. So you put that under fan experiences. You can see I've put streaming revenue, some other stuff in there, merch sales, all that stuff. So pretty much what you see here, right? Then you have expenses. So for example, you might do accrual accounting. Accrual accounting, spelled A-C-C-R-U-A-L, accrual, is basically tracking your inventory as it's sold, as opposed to putting it into accounting software as you buy it. So for example, maybe you bought t-shirts and you bought them in bulk and you got 500 t-shirts at $4,000, let's just say, as an example. Well, rather than having $4,000 come out as one kind of category in 1 month, let's say like in July. So in July, you had $4,000 you spent, but you're not going to get all of that money back right away, right? So you're going to have a massive loss in July for those t-shirts. And doing it that way is called cash accounting. So money in, money out each month. You can do it that way. Your accountant will probably prefer you do it that way because it's easier for them. But if you have an inventory-based business and you actually want to see when these things kind of sell, that it kind of balances it out and makes it look more normal because your inventory is being purchased for future sales, right? So you're kind of thinking, okay, the inventory that's going to be sold is only going to be coming out in the months that I actually sell it. Then it's going to be called accrual accounting. So what I've done here, and this is totally up to you if you want to do it, is I put in only the cost for the t-shirt inventory of what was sold. So there's $40 in expenses of physical products and inventory. So you can see here, let's say, I don't know, it's like 4 t-shirts or 8 t-shirts or whatever it is. You just multiply the cost of that, and obviously you made $80 in income from these shirts. But this is telling you, like, in that month, you know that you lost $40 for the t-shirt inventory. Whereas opposed to if you had to buy $4,000 in t-shirts that month just for the Tulsa show, you would be, instead of making money here, you'd be losing like $3,000. So we want to kind of balance that out and see if that makes sense. Now, what you also spent during this Tulsa show in this month was $75 in gas because maybe you live in Oklahoma City or wherever you go. Then you also spent money on meals, so meals and entertainment. You also spent money on drinks after the show, so meals and entertainment. You also had some repairs, so instruments and repair were on there. And then you also had a hotel. So you can obviously see you were paid for a show, but then you obviously had some expenses from that show, right? So you have to put this all together. So for that month, your income was $1,045, but your expenses were $600. So about 44% of what you actually, made in the month in revenue is actually coming out in profit. So this is what's called profit, and this is what's called loss. So expenses are loss, total amount that you make is profit. This would be actually more like revenue instead of income. So I'm just calling it income here because it's what's coming in. And that's kind of what that term means, income. So incoming, money, revenue, whatever you want to call it. But you can call it revenue or whatever. And then you can call this profit instead of a total. That's just kind of explaining to you why I did it this way. And you can make this sheet your own. You can, like I said, make it for January, February, March, April, May, and so on and so forth. But definitely use this. And if you categorize it like it says in here, it'll make it much easier for any accountant who's going to do your taxes at the end of the year to look at this and then, put it into your bank account and organize it into a software or whatever they want to do with it. And then as an alternate, you can actually use QuickBooks Online. And that looks like this. So if it's just you, it's just like one kind of business, you can probably use the $15 a month Simple Start plan there. If you do this, most accountants can plug into it and do your taxes. So they don't even need to do anything other than go in there and then just run the reports. Let's go ahead and take some action. Use the easy peasy P&L spreadsheet to keep track of any income and expenses for your company. Alternatively, you can use QuickBooks Online. Either way you go, you just want to make sure you track this every single month, because once you don't track your payments and your income for your music career, you're going to find that you're going to lose a lot of receipts. You're going to spend a lot of money. You're going to be basically making quote unquote more in income and taxable income than you actually did. And you're going to be paying more in taxes than you actually should.